I would like to thank each one of you for joining us this afternoon for the high-power technical session titled Capacity Building of Financial Intermediaries, Reinventing the Wheel. It's my pleasure to invite the esteemed panel for the session. This session will be moderated by Amit Arora, Senior Financial Sector Advisor, World Bank, and the panelists include J. Venkatramu, CEO, India Post Payment Bank, Swati Chaudhary, Director Network Development and Advocacy, Women's World Banking, Apurva Rathod, Group Head L&T Financial Services. We look forward to a very insightful discussion. With this, I would like to hand over the charge of the session to Amit. Amit, over to you.
Thank you, Arif. Delighted to be here and look forward to an engaging discussion with the fellow panelists. As you've already mentioned and introduced the panelists, so I won't get into their introduction part, and I request when I address each one of you, fellow panelists, you could perhaps give a little more detailed introduction of the organization that you come from and the context. So as part of the first round, before we kickstart with question and answer, I must share something, a confession to make. Arya, Shilpa and team know I've been moderating, discussions for many years now at this conference and other places. But this is one topic, which still gives me butterflies in the stomach. There are so many dimensions. This is not a tech stack, and this is not a business template which you put in place and roll this out. There are a lot of behavioral aspects. There are a lot of interdependencies, which is why you don't have a very single straightforward answer to many things, and which is why we're still trying to figure out as an ecosystem what works, what doesn't work. And I look forward to hearing from you all what has been your experience. If panelists could confirm that they are able to hear me, that will be helpful. I have a little dodgy network connection on my side.
Yeah, Amit, you're audible.
Yeah,
okay, thanks. Very helpful. So we'll start with the first round, and we have a gender balance in the panel. So I don't have to take any side specific. Let me start with Venkatramu, you. In the first round, India Post Payment Bank doesn't need introduction. So that makes life easier for both you and me. We all know the organization, the parent institution, and its legacy. So, given the background of the organization that you lead, I would say in the first round, if you could help us understand from where it was before it became a payment bank and what it is doing now. The cornerstone of the institution remains the frontline team members, if I may call them Gramin Dak Sevak, right?
Yeah.
Yes. So if you could help us understand how the transition happened. Perhaps this started before you took over the reins, but nevertheless, this is an ongoing process. So for people like us to imagine a Gramin Dak Sevak being tech savvy and providing services, which are tech enabled is still a little difficult to imagine. I'm sure a lot would have gone behind in the scenes. So help us understand how that enablement happened for us to take forward this discussion on the topic that we are discussing today. Over to you, Venkat.
Thanks. Thank you, Amit. Thanks for the introduction. And as you rightly pointed out, India Post does not need any introduction per se, but just to make clear the curiosity around the whole model, how the payment banking works around India Post, I would take you through the structural part. Like if you talk about Department of Post, it's a more than 100-year-old legacy institution. Even before the country's independence, Britishers started this institution. And the way it evolved itself over the years. So if you look at, there are three key domains. One is the financial services, which largely caters to the small savings that we know of. Something like PPF or senior citizen savings schemes or Sukanya Samriddhi savings schemes or a post office savings account. Essentially, it provides banking access to the rural markets through financial services arm. So that is one domain. The second is about your mails and parcels. And third being insurance, the postal life insurance. So these are the three key domains in which it operates. And it's been operating. And surprisingly, Amit, if you look at India Post, in fact, the business correspondent model, which banks started, in late 2000s, actually this model was cracked way beyond by Department of Post through this concept called Gramin Dak Sevaks. Gramin Dak Sevak is nothing but a village level entrepreneur who probably through generations has been working for the department, and then who is expected to work on a fixed tenure basis in a day and a fixed time window in which he operates, and then there is a fixed salary that he's paid off. So that's how the model of Gramin Dak Sevak operates. And today, as we speak, there are over 180,000 plus, close to 2 lakh odd Gramin Dak Sevaks who are operating. And if you look at the network strength of the Department of Post, the total number of post offices are 1,55,000 plus. So of which the network, where the network connectivity is there, if you take only network connectivity based post offices, that would be around 1,40,000. And of these 1,40,000, roughly 1,20,000 plus are in rural areas. And each of these post office covers typically 4 to 5 villages. So that way, if you look at the proximity of the post offices, they cover entire country up to the last mile, almost every nook and corner. So the number of pin codes itself, tells the whole story. So that's how the network is spread. Now, Department of Post was an ideal candidate. From a perspective of financial inclusion, if you look at, obviously, if there is any potential candidate for delivering financial inclusion in the country, and a lot of policy makers have felt that India Post can deliver that. So as a part of that, traditionally the postal department had been aspiring to convert itself into a bank, which is also in line with the practices that were adopted elsewhere. If you see in some of the global nations like Japan, or for that matter Germany, some of their departments of post have actually transformed themselves into banks, or maybe have been taken over by banks. So there have been enough stories. So that way, even in India, also department had been aspiring to convert itself into a bank. But what I could understand from the regulators per se is they probably are not very keen on converting that into a full-fledged bank, given the fact that there are a lot of other systemic risk elements, and also you have a public sector framework which is there in place with so many banks being around. So that way they don't want to clog this particular space. But luckily, in 2014, when Nachiket Moore's committee was appointed, I think at that point in time, the regulator got a model which was more or less aligned with the Department of Post, and that's when the payment banking license was given to the department. So what difference that it made to the entire Department of Post is, one is riding on the entire huge network strength and adding the latest banking grade technology. One is that we are able to offer a lot of banking services on an assisted digital mode. For instance, if you look at the delivery of DBT benefits were happening in some of the other form before 2010, and subsequent to the launch of other enabled payment systems, and the interoperability has also seen a demand for BC based services in rural areas. So that has actually helped in terms of what actually helped in terms of Amit.
So Venkat, help us understand how these Gramin Dak Sevak were skilled, because this is a huge, phenomenal scale. We're not talking of 500, 5,000 or even 50,000. The scale that has been managed by India Post, was it classroom based? What were the...
I'm coming to that. In fact, so when the entire payment banking rollout started, it took us almost 9 to 12 months in terms of training this entire workforce. So in the first year, we hardly did any banking. If I have to admit candidly, I think in the first year, this entire bandwidth, entire effort has actually gone into training these people, making them understand how systems operate, because each one of them is equipped with an assisted kind of a handheld machine, where it's nothing but a mobile phone connected with a biometric reader. Plus, there are multiple options how to get themselves registered, and about the training of various services. For instance, there is an account opening screen. So what all details have to be taken as a part of the account opening screen. So it's a combination of both classroom training and as well as on the field training. Plus, there is also over the call kind of a support, a troubleshooting support was also given to this. And the way we structured is that at every district headquarter, we have placed our people to manage this entire Gramin Dark Sevak network. And each of these resources who are there in the district headquarters are supposed to visit them and then make them understand about new product launches. Whenever new products and services are launched, one is that they are taken through some sort of training about these services. So that way, what has happened is there's a large amount of training which went into in molding these Gramin Dark Sevaks. And another important factor and also is a challenge is the ability to adopt this new technology. So if I look at the kind of demographics that we have among GDS network, typically people who are below 40 are more forthcoming to embrace this new technology. But whereas the elder ones, the older ones, they may not. They're not in a position to adopt this. So sometimes what they tend to do is they tend to use one of their family members to operate this, whenever a customer comes for some of the other services. So that way, at least, some services is being rendered, but this has been largely the case, depending on the age. The other important factor is that almost 30% of our agents are women. And at the same time, the customers, what we've acquired, again, 50% of them are women. So this again has got a lot to do with the kind of confidence and trust that the rural people have among postmen. I mean, if you look at even in today scenario also, there are women folk in rural areas who ask or who request postmen to read letters for them. So that kind of trust is what helping us in terms of enhancing the reach, and also in terms of DBT. What has really helped as compared to any other bank is because of the proximity. Customers tend to prioritize to bank with India Post more, because one is that they save a lot of money. There's enough amount of anecdotal evidence that is there, wherein in places like Yavatmal and all, where people were spending 150 rupees to withdraw pensions. So the moment they came to know that through post office they can operate their bank account, so that way they were able to withdraw cash. So movement of cash, which was otherwise a big problem. So by adding banking to the entire department of post, I think it helped a lot in terms of movement of cash in and out. Even today, if you see, we do almost 2 million transactions on a daily basis with a value worth over 400 crores. So which is a testimonial to the fact that what this network can actually help in running this entire rural economy.
Okay, thank you. That's a very elaborate explanation of the background and how the ecosystem has evolved. I'll now move on to Apurva, but before that, I realized I didn't mention this in the beginning. So we dividing these sessions into 4-5 rounds, and each round would be about 12 minutes or so, allocating 4 minutes to each speaker. And then depending upon how things go, we may have time for some Q&A from the other participants also. Apurva, you part of a large financial institution. L&T Financial Services, is perhaps bigger than some small finance banks. Perhaps not some, could be many small finance bank, and the diversity of the product portfolio that you have is also pretty wide and big. So on one side, you have an arm or, a set of team which would be probably selling tractors, and another one is selling investment products. And then you also do microfinance. So given that the theme of this session is capacity building of frontline employees, intermediaries for financial literacy, and if I may add, also for financial service delivery. So help us understand, how do you differentiate in terms of skilling of your frontline staff for this segment, the lower income segment, vis-a-vis other products. It could be higher end segment or higher ticket size. Either ways, what is the difference that you see in terms of skilling needs and the experience thereof?
Thank you, Amit, so much. Glad to be a part of this panel discussion. And this topic is really dear to L&T Financial Services, especially because through our CSR initiative, Digital Sakhi, digital financial inclusion is something that we really give importance to. To answer your question, as you rightly said, yes, L&T Financial Services is into a lot of products, and the skill development for each of these products differ depending on the type of customer set that we engage with. It will obviously differ from an investment product like a mutual fund to somebody when we sell to a microfinance or a loan that we give. Talking specifically about microloans that we give, it's a very specialized business because it's a purely rural business that we deal with. And there are people who are from varied cultural as well as social backgrounds. So when it comes to training or skilling the frontline staff that have a face-to-face connect with these customers, it's very important for us to ensure that the people that are there on the ground understand these differences. So I would believe that this is one of the important facets that we train our people on. We really encourage our team to look at every interaction with the customers, not as a transaction, but as a service that we intend to provide to our customers, especially in rural areas where we all are aware that there was a time when it was all led by money lenders, and then now the structured financial institutions have been there. While we have seen a lot of change in the terms that the borrowers understand, but there is still a lot of hand-holding that is required when it comes to dealing with them. The other important aspect, which I believe is very relevant when it comes to, is about explaining to them the product. And that can happen only once our sales agent understand the product well. It is important that we make them aware of the terms and conditions. Again, when I come to a rural sector, it is very critical for us to make them understand that repayment on time is very critical. Because when you look at a borrowing over a longer period of time, what affects you borrowing a larger sum in future is your credit scores. And one of the other things that we train our field staff to educate customers about is on this repayment behavior. We encourage them to talk to them about the discipline that they have to maintain to repay, because that's going to help them grow their business, because they're starting right now with probably a smaller loan taken, but obviously eventually they will move to a larger ticket size. And obviously there'll also be a need wherein they might need to take loan for their children's education. So that's the other theme around which we train our field staff. We also ensure that our field staff maintains a regular contact with customers. Again, it's very important because constantly telling them about what is required to be done, training them is what is important. And our field staff will not be in a position to train our customers unless and until we have trained. Last but not the least would be, explaining to them the need of being a service-oriented organization, being empathetic to the needs of the customers there, and not just having a center around sales, but also ensuring that the product is suitable for the customers, which also helps us to ensure that we do not indulge in any kind of mis-selling. So these are the various aspects on which we train our frontline staff. And this helps us to ensure that our rural customers are really understanding what are the nuances of a product and what they are getting into when they borrow from us.
Thanks, Apurva. This is a tall order, I personally believe, expecting the frontline staff to not just be sales oriented and be service oriented. We'll talk more about this, and I'm curious to pick your brains a little more on this, especially the dilemma that the frontline faces. But moving on to Swati. Swati, briefly tell us about your organization for the benefit of audience, what you've been doing, and since you have a gender focus, I have a specific pinpoint question for you. Do you see, based on your experience in India or otherwise, having gender focus or needs gendered training, capacity building? Are there any nuanced aspects which require need for differentiation in training capacity building? That would be very interesting to hear from your experience.
So thank you, Amit. I work with Women's World Banking. So just quickly a little bit about us. We are a global nonprofit, and we are devoted to giving more low-income women access to financial tools and resources. So we're essential to their security, their prosperity, and we work with the diverse group of FSPs to equip these institutions to meet these women's need. We do it through advisory services, which is proof of concepts, market research, leadership training, tailored financial products, customer education, and also investing in women-led institutions. If I look at our recent work in the country, it's been with different financial service providers. There's Bank of Baroda, which is a PSP, Ujjivan, which is a small finance bank, Fino Payments Bank. And when we worked with them on designing these women-centric solutions, it was for a savings-led engagement for increased usage of financial services. And the solution primarily has three pillars about increasing awareness, a compelling proposition. But the third piece is an effective relationship-oriented channel, which is the BC agents, and the importance of this last mile channel as prime drivers to providing both access and quality of services. It's been acknowledged. They've been super successful about communicating benefits, facilitating transaction, being face of the bank, being a mini branch themselves. So therefore, the capacity building of this channel, the ability to create awareness, is obviously at the heart of the work we do. With that, if I look at, firstly about, just wanted to stay with financial literacy for a bit before moving on, is about, financial literacy is about, one is obviously creating broad scale awareness, which is, foundation, very, very important. But in order for customers to act on it, we need the agent to close the loop as a service provider. So first step, providing awareness. Second step is the strong nudges at the right time. And then you close with a call to action, which is the step 3. So therefore, they make it actionable. And therefore, the role that the agent plays is as a relationship manager, and therefore the skilling that is required, and this is across, is one, obviously, to understand your customers, pitching the product effectively at the right time, some things that Apurva also alluded to, and then providing these regular nudges to enable the shift. And it's happening on the ground, but targeted capacity building in this regard and ongoing mentoring would obviously bring about a larger change. Now, if you look at difference between the men and women agents, so that we can look at addressing their different capacity building, I'd just like to share a few statements. First, from our work and the research that we've done, is firstly, women. If you look at the women customers, they prefer agents for two main reasons. One, the fact that they were accessible, conveniently located, and also because they consider them helpful and trustworthy. And if you look at the BC's ability to engage with women customers, it's also reflected in higher cross-sell penetration seen in customers who transact at BC points vis-a-vis others. The second is that women customers find women agents easier to approach, trustworthy, greater at maintaining confidentiality, and we've seen that women customers transact 66% more with women agents because they're feeling more comfortable with them, especially when you're disclosing financial information. The third is that women agents, we found, were better relationship managers. They were able to gain trust of their customers. They performed consistently high KPIs, and in the long run, investing in a small women BC force can prove to be 3x more valuable in the customer base. Now, if we look at the context, as Venkat shared, account holders are 55% women, and but less than 10% of agents are women. So 55% customers are women, but only 10% of the agents are women. So firstly, and it was great to hear that in India Post you have 30% of agents as women, because that's a number that we usually don't hear. So overall, if you look at why is it such a low number, there are various factors. There could be adverse selection criteria because you keep hearing that there aren't any suitable candidates, but and the fact that they have there are limited mobility and reduced ability to work extended hours. But the one main thing is that there are different needs for ongoing support as well. And therefore, it becomes more expensive to both hire and onboard women BC. So therefore, the BC Sakhis as an intervention is a huge enabling step. And organizations which have women agents are able to, from the gender aspect, connect with women customers better. So overall, yes, I mean, there needs a concentrated effort to bring more women agents in, and they do have differentiated needs, both in terms of training, mentoring, ensuring that there's ongoing support through dedicated officials over the first year. And by supporting them and creating, agent communities, it really helps them thrive long term. And a lot of these agents, women agents, are new to job agents, so therefore, I mean, they have natural advantages. They're mobile, they can provide service in private spaces, but overall, in order to boost the ability to serve women more consistently and reliably, we one important thing that comes out is not only to have a high customer base, but a superior cross-sell skills, or so that you can build awareness, you can motivate customers to start saving, increase uptake of other products. So while we need to provide trainings to all agents on the right products, pitching at the right time, but we also need to provide greater support to women agents, especially in the first year, and then we can taper it in the second year, so that we are able to support them and have a stronger women PC workforce participation.
Okay, great. This is great to hear. So what I understand is you're saying if there is a concentrated effort and differentiated training is provided in the initial period, say 1 year or so, the return on investments are better off to compensate for the investment. But do you see financial service providers actually making that investment? I know this is difficult to answer, but let's say if your layer was not there, would a financial institution be doing by itself? There are pressures on returns. So it's always a chicken and egg story, irrespective of the set. Or is there a possibility that over a period of time, by showing better returns, financial and non-financial, we can convince the financial service providers to provide differentiated training, hand-holding support? Is there a chance of that happening?
I think the first thing is the affirmative action to get more women in, because the constant thing is that they are more expensive to recruit. I mean, though if you look at attrition levels, and I don't have numbers, but anecdotally, the attrition levels for women BCs are much lower. So I think we have to solve for the first block first, and we need affirmative action there. I think the second piece, because the retention is greater for women agents, even if you invest in year one, they come up the curve much faster. But if you look at the fact that they stay longer, if it doesn't happen in year one, it will definitely happen in year two. But they definitely, they're better relationship managers.
Fine, got it. Just a follow-up for both you, Swati, and Venkat on this line. So there have been a lot of debates and discussions around, the need to train these agents better. And RBI has been, persuading banks and their partners to get the agent trained and certified and accredited through the IIBF certification. And the house is divided on this. I as a service provider know what best training my agent requires versus somebody else certifying, but then there is some level of standardization which is required, and certification brings credibility. Venkat, very quickly, your view on this. I do realize there is associated cost and effort, but you think this is required, or one can provide equally good training without that level of certification and accreditation also? Swati and Venkat. Venkat, first you.
Yeah.
Very quickly.
Yeah. So see, given the fact that without proper training, these agents would not be able to sell the products and services. So as long as he's trained on products and services, I don't see a specific training, separate training to be provided to these people. I think that's largely taken care of by the service providers like banks, and it's an overkill.
So for me, it's a difficult question, because I'm a believer that a central certification, which is refreshed regularly, is enabling for the sector. However, having said that, I think we just need to quickly make a differentiation between agents who are well informed, super important, versus skill building that's needed to function as relationship manager. I'll keep using this term because I think that's the heart of the work that we do, because the ability to pitch the product in line with the need of customers and moving beyond this cash in, cash out point. We need to work on this gradually, and as a first step ensures that the skilling aspect forms a part of the training of the agent.
Okay, fine. My personal experience from the project that we support and work with, I've seen, if the cost and the logistical effort of making this happen, the training part and certification accreditation is taken care of by somebody else, financial service providers are happy to make this happen because the margins are thin and, they can't afford to invest in that. So it's a little complicated for them. And on the gender side, I've seen, National Rural Livelihood Mission, they have got about 50,000 women trained and certified as BC agents through the ISBF process, both offline, online, which gives me considerable confidence. And this is, a public good investment of Government of India, the RD Ministry, which is creating this large pool which financial institutions are tapping and leveraging. So maybe if the costs are, not loaded onto the financial service providers upfront, then this may be feasible. But I got the point, Swati, that you're making, which is somewhat diplomatic. Get it. Moving on to the second round, coming back to you, Apurva. Now, the session title has some contradiction in itself, and I'm now picking up on that part. It is the capacity building of financial intermediaries to deliver financial education / awareness, depending upon the role that you play as an institution. So tell us something about this digital Sakhi. You've come up with this program, perhaps through your CSR arm, where you're building the capacities of the demand side. Right? But this is not through the financial service providing last mile individual. This is a separate initiative. So we debate the pros and cons of the approach, but help us understand what has this approach been about and your experience thereof.
So we started Digital Sakhi as part of a CSR initiative in the year 2017. And the three things that we looked at when we started this initiative was social impact that it will create, scalability of the option, because whatever we start, it's very important that we're in a position to scale that up. And last but not the least was sustainability. Because if you take any initiative and if the initiative is not in a position to be sustainable in nature after we have probably come to an end of a CSR initiative, I believe that that job is not done. So with these three things in mind, we started our Digital Sakhi program. Just to give you a brief about what Digital Sakhis is. So as a part of our Digital Sakhi program, we identify a set of women. We train these women first in terms of how to use digital modes of payments. We inform them about the saving requirements or the need for saving. And we also inform them about the various government entitlement schemes that rural area people are, eligible for. These are the various aspects that we train the digital Sakhis on. And once we have trained these digital Sakhis, the digital Sakhis do a door-to-door visit, wherein they train every village. There are targets given to them and they train every village. So while we were talking in the first part about capacity building of the frontline staff, I think what we're talking about is capacity building of the community, because here we deal with the community members, wherein the digital Sakhi, provides them training. And one very interesting insight, especially during COVID, because everything was shut. And what we saw was, because the online modes of payment became so in vogue, that, the digital Sakhis were approached by the villagers. And we were really happy with the fact. And there are evidences wherein we meet the digital Sakhis. We've been told that people who actually refused to be a part of this, or listening to digital Sakhi during COVID time, in fact, came to their residence, requested them, to teach them about this digital modes of payment. So through our Digital Sakhi program, what we're trying to do is, obviously, we are trying to empower the underserved by explaining to them or making them digitally literate, especially also on the financial inclusion bit. But at the same time, we are empowering women who are, I believe, are a powerful change agent. We empower women to deliver this for us. And the outcome for this has been really, really great for us. To give you again some examples, when we meet these digital Sakhis, there are women who are a graduate, who've done masters. I've actually come across women who are engineers, who've never stepped out of their house, obviously because of the social and the cultural thing in the area where they are. Through this digital Sakhi platform, we've been able to help them move out of the house. So while the first step was to have them move out of their house, educate them about the digital modes of payment, as well as talking about digital financial inclusion, and they in turn have helped the community. While some few people are, I mean, they've helped the community, they've also been independent from a sustainable point of view. People have got jobs with big IT firms. They have started their own business. And while they've started their own business, they've actually employed other women in the village. So it's not only that they have been in a position to be independent, but they've also helped the other women which are there in the area to develop. So that's the Digital Sakhi program. Yes, we started in 2017. It's a long way to go so that we can scale it up. But we do see the impact that it is having at a village level to make women independent and, really get out of their houses and have. And in fact, in Tamil Nadu, a few of our Digital Sakhis also won the local panchayat elections. So we have seen a lot of, outcomes and a lot of success in the Digital Sakhi framework, the platform that we have created.
Thanks, Apurva. Follow-up question on this, and this is what intrigues me, and I've not been able to, at least in my head, nail this down. Would customer, based on your experience, be willing to pay for this advisory services, the capacity building part? No, because a corporate is bearing the expense of the digital Sakhi, the capex, the opex, and so on and so forth. This is good to have, but do I feel enough entrencing a need to acquire this knowledge and pay for it at some point of time? You see, this could become self-sustainable.
Yes, I mean, if you see the benefit out of it, I really believe that it could be self-sustainable. I'll just give you one more example. We have a concept of digital seva kendra. This is like the Digital Sakhis provide online services to the customers. And we do see people coming into these kendras and they do pay for the services. So I would say that, yes, this is a model where, the customers will be okay to pay as long as they get the services that they're looking for.
Okay, that's encouraging. So hopefully this should scale up. If I remember correctly, the FLCC or the FLC model which RBI propounded was intended to serve the same purpose, but probably these are two different variants and flavors of this. So Swati and Venkat, coming back to you on the same point, while Apurva shared about a layer of last mile connectors who don't provide financial services but build capacities, improve understanding. But you work with the agents who deliver services. Now, do you think it's feasible for these agents to actually invest more time and effort and building capacity on the other side? Because there is it's like going to have a counter effect on the ability to sell more and earn more revenue. So where do you draw a line and strike a balance, or is it even desirable? And like Apurva mentioned, there has to be somebody else who provides this capacity building initiative. Venkat?
Yeah. So, it again varies from region to region, Amit. So it all depends on the inclination of the respective individual who is working as GDS and also his workload. Because more often what happens is if his workload on other side, if it is more, then he tend to allot very less time on these kind of activities. But however, there are few enterprising guys who you will always encounter are ready to balance the load and willing to take more. But coming to capacity building, Amit, per se we cannot put too much of a load on these people, because you need to mark a differential factor between these two, because if one guy has to work on transaction based support, it's better that he be left to do that. For capacity building, it would be better if we can have some kind of an additional resource. For in our case, we normally do that capacity building through our own resources. Who once in a way go to these places and make them understand about the new products and services. But nevertheless, capacity building goes a long way in terms of building the agent level understanding about various services. It would also be good to probably follow the telecom model of promoters. Sometimes what happens is if you have promoter kind of a mobile agents, who can do both capacity building and also some bit of sales page. Probably that can help. I mean, ultimately, a combination of some of these can help.
Your view, Swati, you've already touched upon this, but
Yes,
if you could
sir.
expand a bit more.
I feel the answer is partly in the question. If I was an agent, in order for me to change my behavior, I needed information, I needed skill, but I needed to see the connection on how it would translate into increasing my business. So, both in terms of success stories, peer endorsements, I need to see the connection of all these fancy things I'm saying about awareness, nudges, to translate into uptake and something that I can do, and it does not take me away from what I'm doing. It's part of what I'm doing. So, I mean, what the in terms of the work that we've done with these agents, I feel a practical approach would be to take a phased approach. Um, when we start, if we give them simple prompts or questions that should help them, which they can ask, and they can connect better with the customers. If we look at the FMCG, how the AquaGuard. The salespeople were trained to started with "Kya mujhe ek glass pani milega." So it's about not just pitching the product, but just connecting it and starting the conversation. I remember, visiting a BC who had these cutout of things that customers usually desire, and you would ask, "Ki aapko kya chahiye? What do you want?" And if somebody pointed out the earrings, you would quickly say that for you to get this, you need to save 400 rupees for 3 months. And if you look at the current PMJDY product suite per se, we can say that these are kind of like starter products. You have small savings, you have life insurance, you have accident insurance, you have emergency credit. So therefore, if we help the agent to create awareness, but focus that the customer sees the need that the product addresses. And I can share another anecdote of how impressive some of the agents, the way they explain Jeevan Jyoti or life insurance to the group of customers. And once the customers understand, there's a lot of power within the group because they explain it to each other. And I think the simplicity of the communication, about I remember he said few things, key things, pay a premium annually, small amount compared to your income. You need to get it. You get it only when the event occurs. It's what you get is much more than the premium that you're giving. So asking simple questions, creating awareness, not overwhelming for the information. Prompting them to ask questions, upfront cautioning them the fact that they have to pay yearly, giving a clear call to action. Now, all this that particular agent did. So he created awareness, he closed the loop. But and agents in the specifically in rural areas, they know their customers, they know their families, their context. So if we are able to drive this behavior, the agents can slowly transition into becoming relationship managers, and they can see conversions, which will then prompt them to increasingly do that behavior. So in all, additional work, but doesn't have to be a heavy lift. It dovetails into the work that they're currently doing. And if we give them simple tools on how to do this, I think it'll go a really long way. How do they personalize the content that they're sharing, the insurance claim stories, endorsements of the customers who got these services. Simple rule of thumb that save 100 rupees every month, increase 50 rupees, call to action, leave a little bit from DBT, make it timely when the customer has that cash, to pitch the product, and utilize trusted networks, tap into cohorts. We found that referral cards, the agents have been using, have been able to use it very, very effectively. So, I think this is the skill that if we help the customer, and agents are doing it intuitively, we're just making it more institutional, for want of a better word, and also looking at customers who are at different levels, like a beginner versus who's just primarily withdrawing versus evolving, who's becoming more comfortable versus advanced users. So I think because it's a behavior change for the customer, solving for their barriers, equipping them, and you can only drive what you measure. So consistent monitoring, mentoring, and rewarding behavior, I think would go a really long way. So I think scaling is what I'm saying in the end.
Yes, I agree. Yeah, the emphasis on skilling has to be more and more pronounced to make this happen. Okay, just taking cue from this, all of us and all of us in this room also for very long have been used to a principle of buyer behavior, caveat emptor. Even the investments that we make, there is a long list of terms and conditions which we are expected to go through. Most of us don't go through and simply sign. Now, when we come to the segment that we are largely talking of, and the way the financial sector is evolving, you don't have to have a banking license to provide all sorts of financial services, and a non-bank, be it an NBFC, or facilitator is providing complex products also. The expectations are very, very, diverse now, be it from the financial service provider, the customer, the regulator, so on and so forth. Now, to what extent is it possible to ensure that the product or the service that is being sold is actually suitable for this potential customer? So, Apurva, for example, while this may be less pronounced for a cookie cutter instrument or a product like a MFI loan, but given the direction that regulator wants to take, there is already a discussion paper in the domain saying that what happens if the pricing is free, and the onus is more on the financial service provider to ensure that the over indebtedness doesn't happen. How will we as institutions not overstep and ensure that we are actually aligning in terms of suitability of the product? This is something which we've not been able to crack, and we'll have to go through the journey. I know there are some countries who have been emphasizing on the suitability of the product to be ensured by the service provider. That's a lot of accountability. I don't know to what extent this is feasible, but would like to hear from you, Apurva, first. To what extent this is possible and how to strike this balance?
Like I covered in the first question, product suitability and doing a customer assessment is of paramount importance, and it's really critical to strike that fine balance between doing more business and ensuring that the product is good. If I take the example, the way we at L&T Financial Services work, obviously our product is lending money to the MFI sector. And our parameter of success is that we are in a position to collect the money that we have given. So what we follow the approach is, collection-led strategy, a business strategy, which is built on the foundation of servicing. So we provide servicing to the customers. And like I covered again in the response to the first question, our field staff is trained to assess the customer needs. To give an example, when we give loan to a particular customer, we see their existing indebtedness. If we believe that the existing indebtedness is beyond the threshold that is acceptable to us, every organization has its own risk appetite. If we believe that by giving the incremental loan, it's going to extend the limits that we have set, we actually do not provide loans. So this is the manner in which I believe, a financial institution, by developing in-house their risk parameters as well as understanding what the customer needs are, customize their products, and accordingly, sell the products to the customers.
Okay, thanks, Apurva. I'll harp on the point that for the other speakers to come in, the fact that the loan officer is paid for the loan generated and the quality of the loan portfolio, and a lot of information that is analyzed at the back end is done based on the information that he or she as a loan officer provides. And this is an individual perspective in terms of assessment. What I see of the customer, what is the income level that the customer has. So a lot depends upon this individual loan officer's information and the incentives that are aligned to his own role. So the point I'm trying to make, Venkat, while in the BC sphere, the services currently largely are fairly simple, cash in, cash out. So not much is required to be done to figure out the suitability. But do you think as we move forward, I'm sure your organization has also started doing this, you start distributing more complex product, let's say general insurance. Can we define remuneration models which are more aligned to the relationship management, service delivery, and suitability, and not just sales. आपने एक insurance product बेचा और आपको X amount of commission मिल गया. No, that is the simpler part. But how do we ensure that the focus is not only on cash withdrawal, which helps me earn AEPS transactional revenue, but it could also be on ensuring that customers saves more. So are we there yet, or these are early days? We will get there, and we are working towards it. And how to strike this balance is something which will be very interesting for us to hear from you.
Yeah, so Amit, I think for sure there is a strong need to move beyond transaction-based financial inclusion. While that is one of the definitely one of the basic need in financial inclusion, but as I said, it again largely depends on what model you adopt and how agent is inclined towards that. At least in our case, what we could see is that we are identifying certain potential candidates who can do this bit of relationship management, because it requires a bit of relationship management framework in terms of understanding the customer needs. See, in case of transaction, it is more like a kirana store, where you go and then what product you want and then you buy it. So it's more of that. But whereas when it comes to selling of specialized savings and insurance products, that would require a definite understanding by not only the agent who is selling this product about the customer, but also customer needs to understand and feel the need of that particular product and services. So that's where I think that matchmaking has to happen, and that requires a separate skill set. And we've identified this, and for instance, we are trying to work upon a separate set of agents team who can do this, who can spend some time. Otherwise, what will happen is, if the same guy is interested with this job, he might not find it remunerative, because he might be spending more time in talking to the customer than actually doing the transaction. So it should be again a combination of these two factors, depending on how much of time that he's got. But ultimately, banks have to reach there, and that might require some differentiated agents team. I mean, if you look at the LIC is a big success. Why LIC is big success? Because of their agents. Okay, so LIC invests considerable amount of time and money on training their agents and things like that. And that's true for any other insurance service provider also, because that requires a certain different bit of wiring and the approach.
So, do you think it is possible to have a differentiated incentive structures also for agents?
Yes.
I've not seen, or rarely have I seen, an agent being incentivized to improve savings in a bank account, or do a recurring deposit. Is it because we still don't have those products and the channel itself is evolving? Or is it that we are tempted to first cater to the biggest demand segment so as to generate revenue for today?
Yeah, see, to answer that question, it has to be a combination of products and services, Amit. I mean, to tell you honestly, there's not much of money even for banks within a savings, except for the fact that sharing some of the float income, and that float income would be very less unless actually a person keeps a considerable amount of money in a savings or a current account. It won't really translate into higher income. But the way to position it in front of say agent is that maybe this customer can be sold say insurance, or can be provided some sort of a loan. So that's where you can actually join the pieces together, because that's how even banks operate. Now, a bank branch operates by a bank branch employee goes of a particular customer, because he knows that at some point in time he would be able to cross sell and maximize his revenue. So that kind of probably that kind of a training will have to be given, or positioning has to be given even for agents, and it's true for them. So that way it's no different.
Okay, got it. So Swati, similar to you, but two parts. Suitability, in your experience, what have you seen? Do agents ensure that the product that they are peddling it is actually suitable for the potential customer, or they're driven by the remuneration structure in the back end? Secondly, as I asked Venkat, what's your take? Can savings or deposit mobilization be self-sustaining for the agent and the bank in itself, or like everyone says, it has to be lending and third-party products? My personal experience, and this could be anecdotal, is especially in case of women, they are used to informal savings, hiding from their husbands, and this agent channel is still untapped to tap that deposits or that savings. Do you think some smart product structuring, remuneration structure could help in this, especially for the women segment?
So I think I'll start with, your last question first in terms of, the remuneration. So I just want to step back a little bit saying, what do I want to incentivize the agent on? I want the agent to look at his portfolio for, that's how if he or she views it. If she has to see this as a portfolio, what would she need? There are obviously some tools that she would need in terms of the visibility to various customers, what sort of behavior that they have, some nudges that can come from the back end, because we are all cognizant of the fact that these are low ticket transactions, which means that per transaction what they earn is less. So how can we as an institution enable her? So it could be like simple things like the pop-ups that come in terms of this customer does not have X insurance, so the fact that they are eligible for the emergency credit. So these are nudges for the person to actually speak. Just going back to how do I see it as a portfolio? If I get rewarded for managing my portfolio, now there'll always be challenges that at the time of account opening drive, we had lots of agents at that point of time who've since attrited. So the accounts that they opened are not, or the accounts that the branches open, they're not mapped to anybody. So whose portfolio does it form a part of? Should we give it to a new agent who comes in, or the BC Saki, so that they have some customer base to start with? What can I as an agent be incentivized for? I think savings. Venkat mentioned LIC. LIC, they manage it as a portfolio, the agent, because I get regular annuity. So he hit the nail on the head. It's because I view it as a portfolio, I invest completely in it. So for me, there are two things from a portfolio. One is how much product penetration I have per customer. Would be a proxy of if I'm looking at a customer and trying to explain the need, the benefits of other products which are there. And the second one is about building a savings behavior, because it's a especially for PSP, savings is basically a gateway to financial inclusion, and everything else is measured based on how you are interacting with the bank. So if we look at portfolio measures, I do think it's something that if we incentivize the agents on, we will promote this behavior, because that's the way that we can measure it. In terms of suitability, I'll go back to the point that I made a little bit earlier. What are the tools as an organization that we can provide? So once an agent starts doing it, then that becomes a behavior, because you do it a couple of times, it gets reinforced by the fact that it's increasing their income. I slowly make the shift. We have to stop calling them Kiko agents. I honestly, when you interact with the agents, you ask them that you walk into a bank as a customer, your transactions can be fulfilled either by the ATM or the branch manager. It's the same for you. What are you? Are you a ATM? Are you a branch manager? Everybody's very proudly saying we're a branch manager. That shift needs to be there. We need to start regarding them like that. And I think once they see it, I think it's a cycle that reinforces positive behavior.
Yeah, Amit, I just want to add. In fact, I completely agree with this point that unless until you align the whole revenue what the bank makes to the agent, it would be difficult to get by.
Yeah, I also agree with that. But Swati, this requires a lot of investment on behalf of the financial service provider. For example, to nudge the customer for ABC would require some insights available with this agent, about the customer. I don't think
I
agents have that access. They do transactional services. Ideally, it would be very useful if these agents know what kind of a credit score this customer has, or has this customer taken an insurance, or the family profile, and so on and so forth, which essentially means considerable investment in CRM and like. While this happens for a higher order customer, who has an investment portfolio of a larger ticket size, but to make this happen for this lower segment and through the agent channel, uh, any inkling of what will it take for financial service providers to
I
actually do this? Currently, they struggle with even engaging very well with the branch manager, or getting priority in terms of attention from the manager they are tagged to as an agent. Do you think this is doable? Would
I
banks
think
be doing
pay.
this?
Uh, I mean, very nicely put, Amit. But I feel it's again phased approach. It's all baby steps. I need two things which my Finacle or any core banking provides me. Have I, as a customer, availed of the various insurance or not? That pop up, at least as an agent, I can then make a call saying, do I want to talk about it or not? Second, the OD eligibility, something that the backend calculates. If I start with these two, at least I'm thinking beyond the cash in, cash out piece of it. These two, I don't need any more information. I don't need any, complex calculations. Let's start with these two. And many banks have started doing that.
Okay, if I divert that question to Venkat, I'm sure he'll say, this is again an investment and a cost. My vendor, CPS provider, is going to ask for pack full of money to make this happen. I don't know if this is going to be generating enough.
Yeah. While the traditional technology firms, that is true, very much true, because they try to fleece as much as possible, irrespective of the customer segment. But thankfully, today you have the fintech which are coming into play. See, technologically, we can definitely solve this problem. I mean, given the kind of models that you have in Salesforce. So for instance, the entire customer relationship value, as Swati rightly pointed out, core banking system can definitely derive you a customer relationship value, and all that you need to do is align that with the agent commissions. That's number one. And number two, today there are a lot of analytical play coming into picture, where things like pre-approved offers. So whatever you are trying to say, able to do it in a self-service digital app mode can definitely be given. Same kind of experience technologically can be delivered even on assisted digital mode. So for instance, a customer come for a particular transaction. Now there's a pop-up which comes that this particular customer is eligible for so and so OD or a loan facility. So then and there itself, the agent would be able to tell customer that this facility is available. So those kind of analytical approach can definitely help. And today technologically that can be solved. But obviously, yes, whether it requires a big investment or not is again a question. But is solvable. The problem is solvable.
Okay,
Amit, if I may add on this, I completely agree with Venkat. That digital and IT definitely is the way forward, because using an analytical capabilities today, it's very easy to do the credit assessment of customers. And while initial investment may be required at this point in time, but if you look at the benefits, I'm very sure that it will surpass the cost that any financial service provider will incur.
Okay, thanks, Apurva. That actually takes me, or to some extent, even preempts my next question, which I wanted to ask you all, starting with Apurva. So, technology definitely is a great supply side tool. It helps you save costs, acquire more customers at a fraction of cost, get insights about customers, and so on and so forth. And we are seeing, the spate of digital lenders and so on and so forth. But Apurva, again, going back to your digital Sakhi experience, to what extent this interface with the demand side can be digitized? Can this be fully digitized? Do we really need a Sakhi on ground? Why not just give everybody an app and they can download and they can go through the content, and if they have questions, they can ask. It will save you also money, and you could probably gain more scale. But is this desirable? Is this doable? That's the first part, and I have some more elements, but in follow-up question with other panelists also. You already mentioned about the experience during pandemic, but how far we can go from here is the question.
I definitely believe that IT and digital, like I said earlier, also is the way forward. I mean, if you look at few years back when the computers came, okay, many years back, there was that hesitation that how will people adopt to computers while there was this physical maintenance of accounts, and suddenly you're going into computer. And I'm sure there was anxiety at that point in time also. But eventually we did adjust and we accepted computers, and I think that has become a way of life. And similarly, I see this moving on. Technology becoming a way of life. To answer your question on whether a customer can he or she be in a position to get all answers through an app, I would believe that it will certainly not be there, because even today, when you as a customer are dealing with bank, while there are various IVR options, there are certain questions that you still need interface with a human. So my view is that while technology advancement will be there, it will ease life for a lot of for the people, but there will need to be some element of human interface, because not everything can be through an app. Coming to digital Sakhi, I mean, we are tapping villages wherein now the rural sector is more digitally swamped. They were not savvy. They were not earlier that. In fact, a few years back, I was surprised when I was visiting a village that rural people, they were actually aware of the UPI IDs, and they were knowing much more about the online modes of payment than I personally was at that point in time. So to answer that question, I would believe that digital is the way forward. Will it be completely 100% digital? I would say no. There'll still be an interface. And when we talk about digital Sakhi, what they are doing is primarily they are going and explaining to people the importance of digital. And once they are onboarded, I think they can themselves take it forward from there. And digital Sakhi can just be involved whenever there is a need for them to provide some clarification or some kind of an assistance.
Okay, and in your program, which the Digital Sakhi delivers, is there an element of awareness about grievance redressal, customer protection, ombudsman, and these kind of things? Just curious.
Sure. So the digital Sakhi, the one piece that I actually missed pointing out is, while our digital Sakhis go door to door, what they do is through a tablet. So these are all digital modules that they use. It's not a paper related, a booklet or something. It's a digital module that they use when they train people. And that's why I say that IT intervention at that point is very critical.
Okay, thanks. So, Swati and Venkat, a common question to you. As I said, technology, and I've been a banker myself, so I can afford to be candid now. We've always thought of applying technology to serve the institutional purpose, reduce costs, bring in more efficiency and so forth, and less from the customer point of view. Given the large number of agent networks that are floating around today, hypothetically, and I'm only, I'm just trying to visualize whether this is possible or not. This may be way off the mark also. There could soon be white label micro ATM service providers, agents, or whatever we may call them, and the existing ones also. Can they also work from the demand side? For example, I don't know if they're skilled enough to do so, and the institutions are investing in skilling them appropriately. I have not seen any agent who is equipped to raise a complaint on behalf of the customer. What if a transaction failure happens? What if I have not received a receipt? Unfortunately, I've not seen many banks, equipping this channel with that capacity and the IT enablement also to make this happen. So again, this same point. Is this because this may be counterproductive and is not desirable, or is this about being more thinking from the supply side? Venkat?
Yeah, so see, as far as the customer service or customer support is concerned, first and foremost thing, when you're working with these sort of intermediaries, every transaction has a price to it. Okay, so unless until you incentivize for every activity, and unless there is a ROI for an institution, I don't think you'll be able to implement. I think partly that is also because of the fact that yes, I think none of the banks have really thought about such a possibility in the first place. It would be good idea to toy with. I don't rule out that no, you cannot do such a kind of an customer support activity through these agents. That definitely can be done. But what can happen more and more as we go along is that this interoperable nature in which these BCs are operating, I think this can be extended to even credit kind of services, which is largely in demand. And thanks to the platforms like account aggregation, where there's a lot of information about the customers now getting gathered at various levels. So I think first and foremost, if more and more customers get onto this account aggregator platform through the consent-based architecture, then what can happen is that any customer can walk in to any of these agents and can express his desire to avail a particular loan. So that way, what happens is you're registering your intent for availing the loan, and that can be helpful for various lenders in whatever capacity, in whatever data that they have. They should be able to, take some kind of a decisioning, the credit decisioning. But having said that, this is definitely a long roadmap in terms of, getting data from various data sources. Today, if you look at most of these customers' data is quite scattered and very little amount of data is available, from the transaction trail. So you will have to obviously depend upon certain alternate data mechanism, which is where we are also trying to see if we can, aggregate that data from various agencies and help credit service providers to take some sort of, credit decisioning and arrive at, some sort of a pre-approved model.
Okay. So, Swati, I'll sharpen my question for you. Today, if a customer wants to do a remittance and there is a transaction failure, my account gets debited, but the person on the other side has not received. So what happens? As a customer, what are the options I have? This agent is perhaps of X bank and my account is with Y bank, which is miles away, and I'm in a rural village. I don't have the capacity, the confidence to go and engage with the branch manager. That is one. Second, how empowered or qualified, trained is the agent to navigate this process and ensure that the transaction is actually fulfilled or the money comes back in terms of skilling and capacity building? Is that investment being made? Two parts to this question.
I think firstly, just let's look at what is, first part of your question, what is actually happening on the ground. So it's again very person specific and it's not institutional. I've seen agents like a transaction failure. If somebody from an SBI comes to a Bank of Baroda ATM and wants to withdraw, or vice versa, there are agents who will tell you that this is not going through. So please don't engage in this transaction, because if once you do it, there are high chances of transaction failure at this point of time. The agents who consider you as a part of their, want of a better word, portfolio, they do go the extra mile, but it's very person specific. They engage. Today, an agent is solving problems that the customer is facing. But I think the requirement is, how do we equip them? How do we make it more institutional? So it's not about agent A doing it or agent B doing it. I'll give you an example of, especially when you had all these 500 rupee monthly credits which were going to women accounts. There are a lot of accounts which were inactive or dormant before the government made it open, and agents tried to do their level best. And I saw some certain best practices in terms of, they would check whether it's inactive. They would give you, so that you don't have to wait in the line. They would connect them to the branch. Just visualize that if the agent was able to do a eKYC for them, look at the kind of bandwidth that it would have released from the bank. Look at the kind of experience it would have been for the customer. So I think it's definitely required, and it doesn't have to be the whole hog. We can look at these little things. My strong belief is that the agent today is doing a lot of these things. It's logging you onto an app, helping you see your transaction balance, because it's like technically decongesting his agent point. So let's just make it more institutional. We don't have to give them the whole thing, but like little things which he's anyways investing in. How can we just help, make it simpler for him to be able to do that? I think it would be the step in the right direction.
Okay. Yeah.
Amit, if I may add, sorry
Sure.
on that. So, when we come to the Digital Sakhi program, we do train our agents and the villages do approach the Digital Sakhis in case they face such an issue, which you said that the ATM withdrawal didn't happen, or, there is a fraudulent transaction. And in the village, the Digital Sakhis, because they are equipped with knowledge about digital modes of payment, they are seen as a person or a woman that they can go to, and these along with the women represent to the banks and help them, redress their grievance. So at a village level, we have seen wherein villages approach the Sakhis, so they can help them in such kind of issues that they face.
And Amit, another thing is traditionally, if you look at most of these agents also develop as the customer service point also, because for a customer, that's the only point as far as grievance redressal is concerned.
Yeah, I agree. But very often, what at least I've seen happening is this agent who's trying to do a good job isn't empowered as much, by the branch manager next door. So he always has the dilemma whether he is able to take on that load and will he get that backing or not. But I'm sure with increased capacity building training,
again, their regulator has done a good job in terms of putting a timeline. So regulator said that within 7 days you will have to invariably, not even 7 days, 2 days. So within 2 days the amount has to come back, even if it is failed, the account is debited. Obviously, I think there's a good element of support that has come in both from technology and as well as regulation. So that way.
Okay.
So, and Amit, one last point, and access to people to register complaints has also gone up. And like Venkat rightly said, yes, regulators across are taking interest in ensuring that investors have that portal or the mode wherein they can log in complaints. And I've personally seen that regulators do follow up on what's happened to the complaints. I think today the customers or even the low-income groups are in a much better position to put forward their customers, probably not at the branch level, but obviously with the details that are now available throughout, it's very easy for them to, address their complaints to the nodal officer of the company as well as the regulator.
Okay, thank you. Talking of regulator, that actually brings me to my last point, and this is the last question for the panelists. I get a cue from the organizers that we're coming close to our session's closure time, and we need to give time for Q&A if there is any. So my last question would be, regulator came out with FLCCs and tweaked it based on experience. Then the regulator has also come up with a model of engaging NGOs or not-for-profit arms of financial service providers in financial literacy, Center for Financial Literacy. Then there are CSR initiatives like yours, Apurva, which are doing a good job. And on the other hand, there are financial service providers who are able to do a limited job of building capacities, especially of the demand side, because they have a return to generate. So how do we bring these pieces together in terms of partnership? Why cannot? Maybe that sporadically this partnership is happening on ground, but institutionally, what will it take for, let's say, India Post Payment Bank to work with the nearest digital Sakhi of L&T or an FLC to ensure that this creates the right ecosystem, and also pipeline for customer base, but also an informed and aware customer who knows how to deal with financial service provider. So is there an element which is missing, or the ingredients are there and it is now up to the market participants to stitch these partnerships together? So 2 minutes each to all of you. Apurva.
I believe that the elements are all there. And when I listened to Venkat today about the postal thing that he explained to us, I think if both Digital Sakhi and, Digital Sakhi becoming a correspondent there will definitely help us to create a sustainable revenue stream for Digital Sakhis. So my view is that we have everything in place. It's just that the elements need to come together. Today, when we look at partnerships, we look at partnerships internally when we look at our CSR initiative, because we deal with business to understand the regions where intervention is required. We work with NGOs because they are the best place to understand the ground realities and, help us implement our project. So while we are getting that piece right, taking advantage of the whole ecosystem and seeing how these different pieces can fit together and run, which can be beneficial to the customers, is something that we definitely need to work upon.
Swati, your view?
I think overall, yes, it's about, coalition, building a coalition of willing, even if it's in most informal manner. Some of them are happening and are by design. Like, for example, in the FLCs, they bring in agents in the second session so that they are able to close the loop. So that's by design. I think it's the same for NRLM and VC Sakis. How do you build on this knowledge? But I think one piece about would be with respect to more sectoral push to make it more pervasive. If you have like something close to a cohort based learning, because everybody is working in that direction, so where we could share what is working, what the limitations are, and so that the sharing becomes institutional. And the second one I would say is, there's so much of good work which is happening, so it's not just about best practices, but toolkits, knowledge, what's worked. Equally, what's important is what is not working. If this is shared within the various members of the ecosystem, that would also help bring other people up the curve, because they don't have to go through the same process on their own.
Okay, Venkat?
Yeah, I think it will definitely help in terms of building a scale, Amit. When more people come together and do this. So undoubtedly, the financial literacy is an integral part of the business development. So if there are more players who can participate in terms of developing this financial literacy, that will definitely help. And in our case, we do work very closely with NABARD, IEPFA program. So that helps us both in terms of monetarily, also in terms of the market development. It helps. And in terms of product collaboration, yes, that definitely it's a wide canvas. We can collaborate with like-minded players and take this forward.
So, do I see you and Apurva talking after this session and trying to figure out a geography where both can work together?
Definitely.
Definitely. In fact, our team is already in touch with them.
Okay, great. So, what I understand is, the ecosystem is in place. We just need to connect the dots to make this happen, right? So those elements are already there. But just, if I can squeeze in one more question for you, Venkat. You've been talking about credit being the driver of ROI. So look, majority of the PMJDY accounts are with PSU, right? And there is a standard product, and there has been some push from DFS also on OD, 5,000 rupees OD, and there have been different variants also now, 5,000 or 2,500 and then 10,000. But we've seen very little trickling down to these borrowers. So if I may ask, bankers obviously don't have this confidence. What can be done to improve this confidence, or is this general apathy to smaller ticket size, too much of cost, and too much of effort? So, what is it that will change this?
Yeah. No, it's more about the model, Amit. See, traditionally, if you look at in the cost of credit delivery at such low ticket is highly cost prohibitive. So unless until you have right amount of right kind of rates, it's difficult to provide credit. Even if you provide credit through some sort of diktat or whatever, I don't think it will be able to sustain itself. So what we have our limited experience in this regard is, first and foremost thing, the kind of potential exercise if you can carry out across a particular region. And if you can create that sort of rails, wherein you are able to assess the customer's capability, number one, in terms of data, as I was talking about the alternate data. For instance, a customer who is getting regular DBT amounts into his account, that becomes a surrogate for a credit service provider to assess the financial capability in terms of household savings and things like that. One is the solution to that problem lies in terms of how much of data that you can bring in to assess, and number two is in terms of certainty of recovery. If these two things are taken care of, I think the credit problem is solved, which is where we are working towards.
Okay, so hopefully we'll see some scale picking up soon. And I'm confident there are, forces and actors working on this to make this happen. So this is about time. I see the next panel getting ready. And since we don't have questions from the audience, there were a couple of questions which I factored in the course of our discussions, and the panelists have responded to
So,
that.
Amit, if you can just excuse me, I have one more meeting to catch up.
Yes, we just finishing. Yes. Yeah. So I'm just summing this up. Thank you to all the panelists. This has been a very useful, enlightening discussion. I don't think I did a good job of sticking to only financial literacy and capacity building part, because this was being weaved around the service delivery also. But nevertheless, that's an important part, and I think the audience would have also gained from this discussion. So thank you all the panelists for this discussion and insightful information that you've shared. Thank you so much. With this, we'll close this session and I hand over to the organizer.
Thank you.
Thank you so much.
Thank you all panelists. Sure. We thank all the delegates who have logged in for the session. We'll take a short break and we will join for the important plenary of the day, the highlight session, where Dinesh Khara, SBI, Chairperson SBI, and Tamal Bandyopadhyay will be logging in for a special fireside chat at 3:45 in the same hall. Till then, please grab your tea and enjoy the summit. Thank you, Shati.
Thank you. Thank you, everyone.